Tesla stock is getting absolutely decimated. The flapjacks have been flipped straight on the floor. I thought this was a perfect day to talk about Tesla stock, what's going on here. The stock, even by Tesla standards, is getting absolutely wrecked right now. Stock is down 24% plus in just the past few weeks, even by Tesla standards. That's a big move down. And so I've been a shareholder of Tesla for many years now at this point in time, right? I've gone through a lot of ups and a lot of downs. And I've been through this game for many, many years now at this point in time. I got shares dating all the way back to the first half of 2019 in regards to stock, right? And I've got shares as recent as this past January. And so I thought in today's video, I'm going to tell you what's going on with Tesla stock. I'm going to tell you where this stock price is headed here over the coming months. I know it's on a lot of people's minds. They see the stock just going down day after day after day, and they're like, where's the end? Some folks are not going to like what I have to say in today's video. I'm going to be completely honest. Well, it really depends upon where you're at. If you are somebody that's heavy on margin, you might not like what I have to say here today. If you're somebody that has short-term call options on Tesla, you might not like what I have to say. If you are a buyer of Tesla stock and you're somebody that wants to hold the stock for the next 5-10 years and buy dips, you might love what I have to say in regards to today's video, but not everybody's going to enjoy this one, okay? So appreciate everybody joining me as always. Thanks so much for being here, folks. Thanks for being subscribed. Tesla obviously always a highly controversial stock, and it's been that way for the last 10 years, and I don't see a day when that's not a highly controversial stock. When it's not, that's when it'll be not a fun stock to be in anymore, okay? That will be the time when it's no longer fun. By the way, when today's video is over with, make sure you check out my free workshop I put together for you guys. I put together one for everybody that makes under 100K a year, and for folks that make over 100K a year. It's absolutely free to access that, investing in 2023 and beyond, okay? So we have so many problems in regards to Tesla for the short term. It's not even funny, okay? And the thing you got to understand is Wall Street cares about the short term a lot more than actually they care about the long term, okay? So what do we have? Oh boy, is this bad, okay? So Tesla just cut prices in China again, okay? For I don't even know how many times they've done that now at this point in time. It's quite a few, okay? Now, China, I don't know, and obviously most of my viewers, you guys live in the United States. My next biggest market outside the United States, it would be Europe in general. And so, almost no one's watching this video that knows a ton about China other than just kind of like base level stuff, right? What I'm hearing from sources in China, from what I'm seeing from kind of the numbers coming out of China, and a lot of times you can't even believe those numbers out of China. They try to fluff them to make them look better. It's bad. Youth unemployment's, from what I've heard recently, 20% plus, and China doesn't even want to cover it anymore because it's so bad. The economy's in an awful place for China right now. And the reason being is U.S. stacked up way too much inventory on several different fronts. And so, nonetheless, that's hurt China in a major way. And China kept their economy closed for far too long. They really had their economy closed for like 3 years. They didn't just start opening back up many of their big cities until this year, right? Like in the States, we moved past Rona like fairly quickly, especially if you compare it to China. And so the Chinese market is extremely important for Tesla. And I'm telling you, the Chinese market is not in a good place at all right now. At all. And we don't know when it's going to recover, if it's going to recover, or what's going to transpire there. All we know is China's a mess. They built way too much real estate over the past number of years. They built these ghost cities that, everybody was supposed to move to. And sure, that produces a ton of jobs in the short term, right? And all this cheap financing of all these massive skyscrapers and stuff like that. But at some point in time, the bills come due. And then when you don't have, massive amounts of people living in some of these ghost cities, it's a problem. And so that's something that, honestly, we've been talking about for years, and it's finally just caught up with China very recently, okay? So that's not a good situation. And the reason this isn't a good situation, it's not just about top line, it's about bottom line, and it's about margins, okay? Because Tesla has big margin issues right now. The gross profit is basically falling off a cliff, okay? That's the best way I can put it. The gross margin has been falling off a cliff. We peaked in 2022 in regards to gross margin. Gross margin, obviously, looking at revenue versus cost of sales, right? And so you never want to see any of your companies having a gross margin that's just completely plummeting, right? And when you see things like they're cutting price more and more, we don't know where the bottom is. That's the problem. Like, where's gross margin bottom at? Is it at 18%? Is it at 16%, 14%, 12%, 10%? We don't know. And that's a scary thing. And Wall Street looks at something like that and they're like, yeah, we don't know where the bottom is. But even worse than that is operating margin, right? Operating margin subtracts the operating expenses from the gross margin. So, some people say gross margin is more important. Some people say operating margin is more important. I say operating margin is more important. They're both important, but if I have to choose one, operating margin is even more important. So what's going on with Tesla's operating margin? It's even worse. Okay? It's absolutely plummeting off a cliff. We peaked here in, this was around the first quarter of 2022, right? Operating income margin reaching close to 20%. And now we're like kind of in the 10%ish, a little under 10% range. And this is another one of those. If you keep dropping price, like where's the bottom? For operating margin, like are we headed down to 5%? We don't know as of right now. Okay, and that's just a bottom line, and it's very, very scary for a lot of folks out there, right? Now, on top of that, the reason Tesla's having so much trouble has nothing to do with Tesla's products or services or anything like that. To be quite frank, the main issue for Tesla is the macroeconomic environment, right? And what we're having to deal with interest rates. This is interest rates just over the past year, okay? And now at this point in time, even if you have great credit and you want to go buy a new car right now, you're probably looking at an interest rate of 7% plus, even with great credit. I mean, it was a year and a half ago, if you had great credit, you could get an auto loan in the 2s or 3s. And we're talking about, when you're talking about a 2 or 3 versus a 7, 8, 9, you're talking about a situation in which you're not going to be able to afford the vehicle you hope to afford, right? Or your payments are going to be a lot more, and people are just not going to be able to, basically get those vehicles they wanted to get, right? Now, to add insult to injury in regards to all this, right, is if folks are a little tighter on money because inflation's hit them over the last year, 2 years, that makes it even tougher, right? So, and never mind that, auto insurance has gone up considerably over this past, I would say, year or two as well, right? Auto insurance has skyrocketed. The amount of people that have complained to me recently about auto insurance I know in real life, like it's a pretty large number, right? And so that's all going on simultaneously. That is not good for Tesla at all, right? At all. Now, on top of that, we've had a very low unemployment rate for years, right? You can say, well, what about during Rona? We flashed up there for a second. Okay, yeah, that didn't even count, okay? Government was not allowing people not even to pay rents and mortgages and all the stimulus money and paying everybody's bills and all that crap, okay? That wasn't even real. The truth is we've really had low unemployment, meaning like under 5% for like 8 years, truthfully, okay? And so the unemployment market only really gets worse from here. It doesn't get better. It only gets worse. We're at the peak right now. Like this is as good as it gets, man. This is as good as it gets when it comes to employment market and how easy it's been to find a job and get a job and stay employed and those sorts of things. It gets no better than this. So if we're talking about a situation in which unemployment rate starts to climb substantially, what do we know when a recession hits? What do we know about auto sales when unemployment starts to climb? Let's say unemployment went from 3.6% or 3.5%, wherever it's at right now, to 5.5%, which isn't even a super high number, by the way. 5.5% is still decent. When you start talking about 7 plus, that's when you start talking about high numbers. Well, I can tell you what happens to the automobile market. You sell a lot less vehicles, okay? Look back to the great financial crisis and look at the dip that happened in that whole situation, okay? And so that is not a good situation at all, obviously, if we're going to talk about a situation where unemployment starts to rise in any substantial way. This is as good as it gets, okay? So that's a problem in the short term, right? Now, what does the market really focus on? The market really... a lot of people say it's 6 months. Some people say the market's really focused over the next year. I think it's in between. I think it's like 9 months, kind of like having a baby, right? All these things come back into the stock market at the end of the day, right? And all these things kind of add up. The market, on average, really cares about the next 9 months. Now, if I'm telling you the interest rates are insanely high, the employment market's as good as it gets, right? Interest rates could be even going higher. That's what the Fed's talking about. We'll see what happens in regards to that, right? You could still be facing some cost pressures when it comes to your raw materials, and you're in what it seems like a price war, and one of your most important markets, China, is in a very bad spot right now. oh boy, I mean, that doesn't bode well for the next 9 months, okay? And that's what the stock market cares about, is thinking about the next 9 months in regards to stocks, right? The only positive thing we really have going for us right now for Tesla, and then we'll get back into the negatives. You think I'm done going through all the negatives? I'm not, unfortunately. The only good thing we really have going for ourselves in the short term is Cybertruck. But the issue with Cybertruck, okay, and it's awesome getting to see some of these Cybertrucks, getting out there and hopefully getting delivered and whatnot. But the issue with Cybertruck, this is not going to be meaningful to revenue, certainly this year, right, for the remainder of the next 4 or 5 months. It will be at some point in 2024. Best case scenario is meaningful to revenue in the first quarter, but it could be potentially all the way up until the third quarter of 2024 until we see wow, Cybertruck's really starting to make a big difference in the numbers. So exciting to see that, but we're not going to see anything meaningful there in the short term, right? Now, obviously, Tesla still trades very, very rich, right? Despite all the negatives that are going forward in the short term, it still trades rich. And this is because a lot of investors like myself and maybe some of you guys are willing to hold this stock kind of through thick and thin, the ups and the downs, and we're not trying to really time it out in terms of selling out of stock and then trying to buy it back and those sorts of things. If we see massive crashes in the stock, we'll buy some shares and we'll take advantage of that. But in terms of trying to time in and out, we're not really into that game. So it trades rich. Tesla's always going to trade rich, but when you trade rich, you do set yourself up for bigger potential downside in a scenario where things aren't quite going up to standard, right? Now, to make this matter worse, the other auto manufacturers are going through a really bad time. And keep in mind, they're going through really tough times in an environment where unemployment's under 4%. Now, once again, keep in mind, if unemployment was to skyrocket at any point over the next 12 to 24 months, it's going to be much more devastating. So if you look at these automakers, right, look at their sales in 2022 versus 2021, right? And keep in mind, interest rates are substantially higher now than they were in 2022, right? Toyota was down 9% last year. Ford was down 2%. Chevy kind of bucked the trend. They were up 6%. Honda was down 33%. Hyundai was down. Kia was down. Jeep was down 12%. Nissan down 25%. Okay, this is in the United States. Subaru was down. Ram trucks were down. Okay, so all these automakers are feeling pain right now. If we look at a global scale, you got to understand some of these automakers are used to making 5 to 10 million vehicles a year. If you're talking about any sort of global systemic problem, recession, these auto manufacturers are going to have to continue to likely cut price and cut price and cut price, right? To try to move units. Dealerships will start going hungry, and the dealerships end up starting to cut price, which, by the way, in regards to dealerships, okay, they might have it coming because these dealerships have marked up vehicles so insanely high. The amount of stories I've heard from people in real life about trying to get a vehicle and it's got this crazy dealer markup because there was so much demand for vehicles, especially during 2021, 2022. So dealerships were we can put, the crazy numbers. I'm talking tens of thousands of dollars of extra dealer fees on top of all the other commissions and money they make from all the different financing and all the other crap they sell you at the dealership. And I can tell you a lot of these dealerships could go through a very tough time over the next few years. And so it becomes a price war, okay? An absolute price war. Well, guess what? If you're going through a price war for the next year or two, let's say that's a potential that happens here, it's not going to be good for margins. I can tell you that much. If all these auto manufacturers are fighting for their life, right, and you're going to do what you have to do if you're trying to make it to the other side as an executive of these bigger other auto manufacturers, you're going to cut price to whatever you got to cut price to move units. Because at the end of the day, it's survive or die. And if it's survive or die, you're going to make whatever move you need to make. That's just a bottom line when it comes to that. Now, to make this situation even more interesting, because Tesla's not in a situation of survive or die, like some of these other auto manufacturers that are loaded to the hill in regards to their debt levels and their interest payments and all sorts of things. Tesla's not in that situation. But I'll be honest with you guys, based upon what I've been hearing from Elon Musk, it sounds like he wants to go to war. I'm just being honest with you guys. As somebody that's listened to this man for 10 plus years, I think he wants to go to war. Not he needs to, he wants to. I don't think he's cutting price because necessarily, if Tesla moves some extra units in China and they cut price, it's not like it matters in order for Tesla to keep the lights on. It's just not like that. But I think deep down, and I think Elon Musk has always acted like He's not bothered by all the disrespect from kind of like mainstream auto over time, right? The big automakers. I think he tries to play it off like real cool, but I think deep down he has hatred for a lot of those folks in big auto. And I think he wants to go to war with him. I think he wants to bury a lot of them. I'll just be completely honest. That's my just hunch. He's obviously never stated that publicly. It's just, I've seen what obviously, the disrespect big auto kind of shaded toward Tesla from so many years, and then reverting course. And, I think this is just an opportunity for him to go to war with these guys. And I wouldn't want to go to war against Elon Musk and against Tesla. I just wouldn't. That's too tough of a company to compete with. And I think these other auto manufacturers are going to realize that in a substantial way. But at the end of the day, you add up this, right? And that's, once again, not good for Tesla's margins, certainly in the short term. You can say, well, if they eliminate a bunch of competition and put these guys on their back foot, I mean, that's huge for them for the long term, but for the short term, that's not good. And once again, Wall Street really cares about what's going on over the next 6 to 12 months in regards to Tesla, not the next 6 to 12 years in regards to Tesla, right? So this is a big factor, okay? Now, next thing is, I'll just be honest, there's something called scarcity mentality and there's abundance mentality, right? And I can tell you, Elon Musk has usually most of his life been in abundance mentality, no doubt about that. To achieve what he's achieved, he's been in abundance mentality. But I can tell you guys, the man has been in scarcity mentality for a year and a half now. Basically, actually over a year and a half. Since the beginning of 2022, he's been in kind of a scarcity mentality mindset. Now, why this matters so substantially is this is a man that is willing to cut price and do whatever it takes to ultimately not just survive, but come out to the other side stronger than ever, okay? If you listen to his commentary about recession going all the way back to the beginning of 2022, he's really been in like a scarcity mentality for quite some time, and he still is, to be honest, okay? He has not flipped over to that abundance mentality yet. And I can understand, because when you're in the auto sector and, your margins are just going down and down, down, gross margins, operating margins, you keep having to cut price. In order for your customers to be able to afford a vehicle, they're now paying, these absorbent, obviously, interest rates. I mean, if you're somebody that doesn't have good credit, you could be looking at 10% plus interest rates now on these auto loans, right? That's a big difference versus 18 months ago. And so I don't know when, Elon switches back to abundance mentality, but it's not right now. It could be a year, could be a couple years from now, and that's very, very important, okay? Now, the next thing that matters significantly is Elon Musk has pissed off a lot of people over this past 6 to 12 months, okay? We got to talk about the elephant in the room. What he's done with Twitter and all the stuff he's been up to and going on there, he's pissed off a lot of people, okay? And, I've seen what's going on and what he's up to in regards to, like, throttling posts on Twitter. Well, now they call it X in regards to, making sure certain negative stuff doesn't get out there, and then boosting his stuff and positive stuff in regards to him or Tesla. Like, I see everything that's going on there, and it's kind of laughable, but it is what it is, okay? And the bottom line is he's pissed off a lot of people. And it ends up hitting numbers, okay? It ends up hitting numbers. Ask Bud Light about this. You piss off a lot of people, they're going to not buy your product as much. Not everybody's going to care, but enough cares that they'll make differences in what they decide to do based upon, their choices, right? You even look at Target's numbers that came out this morning. Target's profitability was phenomenal. The numbers are skyrocketing year over year, but look at their revenue, down 5%. I can guarantee you that is because of the whole drama in regards to, I don't even want to get into that whole situation, but what would happen there? The bottom line is you piss off a lot of people. They will make a decision to avoid your products and services. They will view you in a negative light. And I can tell you there's a lot of real hatred for Elon now at this point in time. Elon used to be viewed from the public. Elon used to be viewed back in the day as people were either indifferent about Elon Musk. He's been famous for a long time. People were either indifferent about Elon Musk or they liked Elon Musk. They're like, oh, he's good for humanity. He's doing all these great things and he's trying to push things forward and whatnot. I'm telling you, there's a lot of people that hate his guts now in regards to the general public. And it's a large number, a much larger number than it's ever been in history because of obviously all the decisions he's made and certain agendas he's tried to push and things like that. And so that's another one of those things. It doesn't add up to a good thing in the, let's just call it the short term, once again. Now, those things might be forgotten over time, and a year from now, 2 years from now, 3 years from now, it might not matter anymore, what Elon Musk did with Twitter and the decisions he made or didn't make and all those sorts of things. But for right now, it does matter. And that's the important part, right? Because this is what everybody's caught up into, okay? So now let's go ahead and talk about kind of price targets I think are realistic given different scenarios that I see playing out here, okay? Now keep in mind where Tesla stock price is right now. Tesla stock price is 225-ish right now as of recording this, okay? So there's a few different scenarios I see playing out here in regards to Tesla. One's $200, one's $150, and one's actually where it goes under $100, okay? Yeah, the $100 one might be a little scary to people that might be holders of the stock right now, or especially if you're margined out or on calls or something like that, because that's a whole situation. And we'll talk about how do you get to 150, how do you get to 100. Okay, 200. This is probably the most realistic. Obviously, it's not that dang far away. Like another 10% downside from here. All it would take for us to go to 200 or a little below 200. It's just a little more weakness in this market. We know August is relatively weak for the market. We know September is usually a trouble month for the market in general, right? We know we had a big move up this year. We're kind of giving back some of those gains now. It seems like the market's kind of fatigued now at this point in time. And so I think $200 is definitely possible. I think literally all you need is a little more weakness in the Qs and the NASDAQ, and you're at 200. It's not like a big stretch to go to 200, okay? Now, 150 is a little different. I think if we saw another price cut in the United States, I think we're going to 150. If he cuts again in the United States, it's just going to send the message of like Elon is just on a rampage. He wants war. He does not care about profitability at all. And that's just going to scare away a lot more investors in terms of like, wow, he's really just absolutely a madman and he's going to cut price to whatever it takes. Okay. So I think if we see even one more price cut and we get some weakness in this market, you're pushing 150 in that sort of situation. Now to get to 100, which is over 50% downside from here, keep in mind we entered this year just over $100 a share. So that would be just going down to where we were at the beginning of this year. Now, in order to go to 100 or below, we're going to need to see the economy deteriorate massively, okay? If we get into a real pickle here where the Fed lags really catch up with us in 2024, which it started to hit a little bit, but it hasn't really hit big time yet. Considering how fast the Fed raised rates and how high they've raised them, which is the highest we've been at in 20 plus years, I can tell you it's likely going to hit in 2024. It's not a guarantee. Could push out to 2025, but the Fed lags will likely hit in 2024. And when they're going to hit, it's going to start pushing dominoes the wrong way. The Fed's going to, at that time, probably try to reverse course, but it's going to be too late. And then you're going to go through a recession. And then the Fed lags on the other side usually take 1 to 3 years to catch up, to kind of bring things upward again, right? So that would be a pretty traumatic thing to go through. And if we went through a situation like that, that's how you get to $100 or below in regards to Tesla stock. So, but that, yeah, you're going to need the actual economy to go into a major recession, at least a medium recession. Medium to major recession, you can get Tesla back to $100 in that sort of environment. Because I'm telling you, that would make it so ugly for the other auto manufacturers. It would become an all-out price war. We've gotten a little appetizer for a price war. But we're like, no, this isn't even an appetizer. We just sat down at the dinner table, okay, in regards to price war. We haven't even got the appetizer yet. And never mind a full course. You want the main dish? I can tell you, start skyrocketing unemployment, and you're going to see the main dish, and you're going to see major deflation in automobile prices, and you're going to see, it's a fight for survival at that point in time. There's no doubt in my mind Tesla's going to be there at the end of the pie to survive and make it to the other side and be stronger emerging from that than ever before. But there's no doubt if we're going to see some real weakness in the economy, there's major, major downside still for Tesla stock, even after this 24% move just in the past few weeks, okay? Now, if everything's grand and we never get a recession and there's a situation where the Fed lowers interest rates and inflation goes away, to completely nothing, sure, we can start to come back and, next thing you know, we'll be 300 plus and we can push back to 400. But, at this point in time, I don't know how realistic that is. I'll just be completely honest. That might be a little bit of a far-fetched fairy tale because that's not usually how this game plays out. So, and we know the Fed just screws up every single time. They screw up every single time. They keep it too far, too long, it is what it is, okay? I appreciate everybody joining me as always. Thanks so much for joining me, folks. Even though my video's a little jumpy here, I appreciate y'all being here. And once again, get my free workshop down there. You get some good value out of that one. That's pinned comment. I made one for you guys that make under 100K a year and one for folks that make over 100K a year investing in 2023 and beyond. And go Tesla my Tesla. As far as me personally, if the stock drops a ton more, I'll pick up more shares. If the stock is in a really strong place, it doesn't matter. It's not like it's a sell for me in regards to good old Tesla anyways. This is just, the shares I own in Tesla now at this point in time are filing cabinet shares. I took my big, huge profits on Tesla, back in 2021 or so. I took my huge profits there. For the shares I hold nowadays, these are just filing cabinet shares. Just keep them in there. And if the stock goes down big, add shares. And if it doesn't, it's fine. It is what it is, okay? Appreciate everybody joining me as always. Much love, and have a great day. Thanks for being subscribed.